So with Chinese holidays out of the way, we knew that this morning when the Chinese market would reopen, it wasn't a question of if it was going to be in the red, but by how much. And we got our first glimpse. It's around 8% down the Shanghai Composite. Last time we saw this was around August 2015. This is despite stimulus attempts by the Chinese government. And in the FX market, USD CNY back above 7. Now, in terms of commodities, they've also been taking a hit. And if we take a look at the percentages in terms of China's global consumption, you can see exactly why. And so if there's ever any issue, slowdown economic, for whatever reason, you can see that a lot of times commodity markets get hit, especially when it occurs in China. Now, in terms of sectors that have been getting hit, it's no surprise that travel and tourism have been getting hit pretty hard. But transportation in general, especially in the biggest car market of the world, this was prior to the virus. We already had slowdowns in the transportation sector for both China and India, and we can see that if people are opting not to go out as much, of course, that's going to end up hurting the transportation sector as well as the energy commodity that it relies on. Other sectors that might get hit, this also includes the luxury sector, especially if the spread between luxury and necessity starts to narrow as people start to shift towards just focusing more on necessity and avoiding luxury for the time being. Now, what about overall asset classes? We can see that safe haven assets, items like yen, gold, and bonds, relative outperformers of the past couple of weeks, whereas equities, commodities, and commodity currencies have been relative underperformers. That's it from all of us here at IG. Thank you so much for watching.